this video, we're going to learn how to solve this JAMB economics problems under international trade. So look at the subtopic trade, balance of trade payments. Okay, so we have about 18 to 20 questions to practice in this video. Let's get started. The first question I have here says one way of correcting the balance of payment problem of a country is to have introduce import promotion measure, the value of the currency, buy investment abroad, the emphasize import substitutions industries. Right answer is option B, which is the value of the currency. The valuation of currency is basically reducing the exchange rate of a country's currency to another currency. For instance, the Nigerian currency naira at the time of recording this video is being exchanged with the United States dollar. That's $1 to naira is 1,700 approximately to a naira. Okay, so when you reduce the exchange rate from 1,700 to a dollar, so let me say 1,500 to a dollar, that's the valuation of the currency. So with reduction in exchange rate is the valuation of the currency. So one way of correcting the balance of payment problem of a country is to devalue the currency, option B. The next question is this one. It says international trade has general effects on the dash of a country GDP, option B. Very important. Next question is this one. It says the major source of Nigerians foreign exchange is exports of, so it's very obvious, option B, crude oil. Next question is this one. It says one of the techniques for rectifying the deficit balance of payment is real fiscal intervention, devaluation, import promotion, borrowing from abroad. So the right answer is option B, devaluation is one technique for rectifying deficit balance of a payment. So I've already explained devaluation in question 1. Next question is this one. It says a deficit balance is measured by subtracting the debts from the credits in the real current and escrow market, capital and escrow accounts, current and escrow accounts, rather capital and escrow account, current and capital accounts, current accounts. The right answer is option D, current account. Very important. This question is this one. It says the difference between visible export and invisible import of a country in money terms is known as balance of trade, option D. Very important. This question is this one. It says one of the ways of correcting the deficit balance of payment is to, so the right answer is option A, is obvious, devalue a country's currency. Okay, I have explained the valuation already. So the next question is this one. It says if a country has a balance of payment crisis, which of the following measures can best bring about improvement in the short run? Large scale export to locally made goods abroad, investment in capital market abroad, repayment of debt to her creditors, large scale importation of foreign goods. So the right answer is option A, large scale export of locally made goods abroad. Okay, next question is this one. It says the difference between payment and receipt for visible trade is called balance of trade, option B. Very important. Next question is this one. It says if Nigerian imports vehicle from Japan, the transaction will appear as a credit on Nigeria's balance of payment, credit on Nigeria's balance of trade, credit on Japan's balance of payment, debts on Japan's balance of payment. So right answer is option C. Since Nigeria is importing vehicle from Japan, so the transaction will appear as credit on Japan's balance of payment. Okay, next question is this one. It says if a country has a balance of payment surplus on current account, this means that there must be a positive balance on capital account. Total invisible export is greater than invisible import. The aggregate of the balance of trade and invisible balance must be positive. The value of goods exported must be greater than the value of goods imported. So the right answer is option A, D. Okay, the value of goods exported must be greater than the value of goods imported. So that's the right answer to this question. The next question is this. Says international trade has general effect on, I've already answered this question, this is repeated, it has general effect on GDP, option C. The next question is this one. It says when a foreigner on a visit to Nigeria pays for hotel accommodation and meals with some foreign currency, the amount paid should be recorded in Nigeria's balance of payment as an item of Nigeria's import trade, foreign capital influence into Nigeria, Nigeria's invisible export trade, Nigeria's invisible trade. So guys, the right answer to this question is option D. Okay, so when you talk about services, talking about invisible trade, whereas when you talk about goods, talking about visible trade. So guys, the right answer to this question is option D, Nigeria's invisible trade. Okay, next question is this one. It says the balance of visible trade is the difference between the values of current account and capital account, imported and exported services, exchange rate of local and foreign currencies, imported and exported goods. So when talking about visible trade, talking about goods, the right answer is option D. So the balance of visible trade is different between the values of imported and exported goods. Next question is this one. It says the process of matching a deficit in the year as a corresponding surplus in another year is referred to as real wages and salary, balance of payment deficit, economic growth, price stability. The right answer is option B, balance of payment deficit. Next question is this one. It says balance of trade shows the relationship between the total value of visible import and export, deficit and surplus balance of payment, total value of invisible import and export, internal external trade. The right answer is option A, which is total value of visible import and export. Next question is this one. It says dash is not the cause of balance of payment deficit in Nigeria. Low export promotion, high servicing of debt, no import substitution strategies, poor performance of non-oil sector. The right answer is option D, which is poor performance of non-oil sector. Last question before we end this video is this one. It says long-term capital outflow is recorded in the balance of payment as A. We have debit on the current account, credit on the current account, debit on the capital account. We have credit on the capital account. So a long-term capital outflow is recorded in the balance of payment as a debit on the capital account, option D. Okay, debit on the capital account, option C rather. So the right answer is option C. This basically can do problems involving international trade under the subtopic balance of trade payment. We practice with about 18 to 20 50 questions for this video. Hope there's something interesting in the video. Let's go to the video, guys. If you are new to this channel, once more ensure that you subscribe to this channel by hitting the subscribe button for more of the videos. So like, share and comment on this video. Tell me how you feel if you want to learn from this video. If you seem to have any specific questions to ask regarding what I've talked about in this video, feel free to leave a question in the comment section below and I will ensure to give you a response. Also ensure that part of the channel batch by clicking the JAMB button. You'll be getting premium information and help you to excel in your external exams like JAMB and other external exams you'll be writing. Okay, having done this, click on the screen above and I will see you in the next video. Thanks for watching.